Can retirees get property tax exemptions with proof of residency? Have you ever wondered if retirees can save money on property taxes just by proving where they live? Well, let's break it down. Yes, retirees can often qualify for property tax exemptions by showing that their home is their primary residence. But there are some specific criteria to meet, like age and sometimes income limits. Most property tax exemption programs for seniors requiring homeowners to be at least 61 to 65 years old, depending on where they live. Proof of residency means that the home must be the retiree's principal residence. In many cases, retirees may need to have lived there for a minimum period, which is often between 1 and 3 years. One of the most common ways for retirees to reduce their property taxes is through homestead exemptions. These exemptions lower the taxable value of the home. For instance, many states offer a homestead exemption that applies only to a primary residence, which means the home's assessed value for tax purposes is reduced. Seniors aged 65 and older may qualify for additional exemptions or increased homestead exemptions, further lowering their property tax bills. In some areas, there are also options like a senior freeze or tax ceiling. This means that the school district portion of property taxes can be frozen at the amount paid when the homeowner turned 65. This prevents increases in that part of the tax bill, which can be a huge relief. To apply for these exemptions, retirees need to submit an application to their local tax assessor's office. There is usually a specific deadline for this application. It often requires proof of age, proof of residency, like a driver's license, utility bills, or voter registration showing the home address, and sometimes income verification. Missing the application deadline can delay benefits for an entire tax cycle. From a budgeting perspective, taking advantage of property tax exemptions can significantly reduce housing expenses. Housing costs are often one of the largest expenses in retirement. By lowering property taxes, retirees can better manage their fixed incomes and allocate funds to other essential expenses or savings. It is essential for retirees to check with their local tax authority to understand the specific exemptions available, eligibility criteria, and application procedures in their area. This way, they can maximize their potential savings and enjoy a more comfortable retirement.